Hello, I'm Laura MacPhee, Insight Editor at Pensions Insight and Engaged Investor magazines, and I'm here with Magnus Spence, a Director at Spence Johnson. Very good to have you here.
Thank you.
So we've been talking a lot about DC, and I was just wondering what you think the big changes are coming up over the next year.
I can answer that question by talking about investment changes. I suspect there are all sorts of other changes. It could be talked about communications, administration and so on. But let's just focus on investment changes and what, for example, what new offerings are emerging. Because I think there's some quite interesting work being done behind the scenes in the asset management companies to try and develop what they very often call solutions for the DC space.
Yes.
Now, solutions in DB is a reasonably old story, but solutions in DC is just beginning to emerge as the big story from an asset manager perspective. So, for example, a target date fund is a solution, it's a package solution, and a very cleverly packaged solution or that works very well in DC. That's the best known one. Diversified growth funds are a sort of solution, package solution too. And again, that's an old story. So what new things like that are emerging? Well, increasingly we're seeing, and I've heard it for a while now, but outcome-orientated funds of one sort or another. An outcome being helping a pensioner achieve a certain replacement ratio, for example, rather than simply trying to expand their pot. So we're seeing that, but I think the real innovation is coming in with words like guarantee. I think we are beginning to see more and more thought being applied to guarantees. Generally speaking, the insurance companies, who used to be the providers of guarantees in the past, are very often you hear them saying that guarantees can't be provided in DC because it's too expensive. But I think more innovation is happening which will provide some form of guarantee, limited guarantees possibly, in DC in coming years. And that will address one of the big issues in DC, which is that DC members are fed up with uncertainty.
Yes.
You know, diversified growth funds tries to address this by reducing volatility, and we've seen the importance, Nest and others are stressing the importance of reducing uncertainty by getting rid of volatility as much as possible. But guarantees will probably be the best way to deal with that. And what else could we be seeing? Well, risk-based funds is another interesting area, where increasingly we're seeing funds which are trying to deliver a certain risk outcome or objective.
So how does that work?
Well, you as an investor would be able to select between a high, medium or low risk default fund, for example, and we're increasingly seeing that type of default fund structure being developed. So really simple and engaging for members to have, instead of a complicated fund name, simply a risk-based offering where you can position yourself according to how adventurous you feel or that advisors tell you you ought to be. And if you don't choose one of the outer risk options, you will be put in the medium risk default by default. So that's another way that funds are going. Otherwise, let's watch this space, because I think some quite interesting, as I say, a lot of very intelligent people in asset management companies, sometimes too intelligent for their own good, frankly, but they are putting a lot of thought to this issue of how they can help solve, as they understand DC problems more and more, they're putting a lot more thought to it. So stuff is happening.
Yes. And what about those people who are coming from a DB background, who only spend the last part of their career in DC? Do you think there's adequate provision for those people?
You mean people who have found that they've been closed to future accrual,
yes,
and they're being switched over?
That's right.
I haven't heard people saying that they are a specific category that we need to sort of shed too many tears about, frankly. I mean, generally, if they've had a DB pension most of their life, a DC pension will just act as a little late life top-up for them and a way of channeling their late life, contributions. I suspect that the existing DC structures will do that very well, and I don't see any need for them to be treated any differently. Hadn't heard of them being treated differently anyway.
Okay, great. Well, thank you very much for that.
Not at all. Thank you.